Phoenix of the team.
Folks, welcome back to another episode of Chart Talk, special 420 edition. Want to give a big shout out to my boy Alex Shuckers, Frame to Flower. If you want him to build an entire grow house for you, he will do it. He's the guy. He is your guy. He sent me merch. He's one of my favorite members. Send me merch. Become one of my favorite members. Very easy. So welcome back, guys. Bennett, whoa, no beard, huh? Looking pretty smug over there.
Ooh. First time I shaved in like 4 or 5 years.
Oh, no, it's all right. Yo, I take this hat off. I have like a fucking 18-foot afro out of nowhere. Quarantine's tough.
All right, so should we jump into market outlook or?
All right, let's jump into market outlook.
All right.
All right.
All right, Shake, you want to jump into market outlook?
Yes, I do. All right, so last Monday was when? Monday, Tuesday, Wednesday. I'm trying to see on the chart because we were saying we were going to go higher there. I remember, and then and we did. We all had a great week of trading. It seemed like the chat did very, very well. And then recently at this close, I just kind of switched gears. I just kind of got net short. I really didn't want to have to tell you this, but
Do your thing.
So market's coming into resistance here. We're kind of failing at this resistance level, and this is coincides with that first initial low, those 285 lows in the SPY with that first down move. We ran a lot back to these highs, and I'm not saying we're going back to all these lows, or I don't even know if we're going lower, but my take on this was that I saw a lot of sluggish price action up here, and then these Shopifys and these Amazons, they can only stay this strong for so long. They're going to have to pull back, and we're not seeing the market run anymore with these names. So that was kind of the cue I was looking for. And I got short this Apple, and I'll talk about that later. Good trade, bad trade. But we got to touch upon this crude oil. It was probably the most historic day in oil ever. Prices went below zero. How the fuck does that happen? I'm just getting back to my desk like 30 minutes ago, so I didn't get to dive in to this oil news. Did you see what really happened with this oil?
So there was like May contracts like went negative, but again, it's not like the energy sector itself didn't get too banged up today. It's just
22 a barrel or something like that.
Yeah, it's like you're never going to go to the gas station and get paid to take oil. That's not going to be the case. It's just the people that own those contracts are really screwed. And for you, me, 99.99% of other people, no one's ever had those. No one's having those contracts anyway. So it's it's a very small pool of people that are getting really bent over a barrel, pun intended. But the energy sector today didn't. It's now 2%. It didn't get too smoked, but that was definitely a crazy headline to see.
Yeah, I was very surprised also to see. Like even the USO, it's down, but it wasn't down like the crude futures were. That was a fucking crazy move, and I was surprised that it didn't even really hit the equity markets. We saw SPY like give up a little weakness at the end of the day, but it's not like you'd be able to tell we're having a historic day in oil by any means. So I thought that was very interesting. That kind of added to my my thesis of getting net short a bit. I just think that oil might have to catch up to the market, and they might drag it down a bit. And we've just been on 30% in 3 weeks. It's not. I don't think this is a crazy place to take off risk to long side and start looking the other way.
I totally agree. I mean, even chart-wise, when you zoom out on the SPY, it's like 290 has been such a major level, like going back to 2018, that it only seems normal that would start to act as resistance again.
Right.
And we have such a wide range. It's like, we've retraced more than half the move in a month, which no one really saw coming. So I think with that, do you want to jump into some of the more ideas? We do have quite a few.
Oh, God. All right.
I know you want to be this. I know you want this to be a quick one, but it's definitely not.
All right. You're getting some really thorough explanations today, guys.
All right, so we'll start with David Taylor. First one is this STSA, healthcare, recent IPO up through 20.
It's just too thin. It's a really great chart. It reminds me of this chart I was looking at today. I can pull it up real quick. What is this? STSA meet SWTX. Both great charts. They're just too thin. If you look at a 5-minute chart, it's like there aren't many trades going on. It's all gaps because of how thin it is. It sucks being in too thin of names. I've been in this go for a little bit, and it just doesn't move that much. It's just very frustrating when these things don't move for 15, 20 minutes at a time, and then the bid-ask spread gets too big. So, I mean, it's a good chart through that 20 area. I do like the chart, and I see the idea. It's just too thin. So I don't generally – under 250, 300K average volume, I don't usually trade. This one does about 40K average, so too thin.
Yeah. Next was this EB, Eventbrite, another recent IPO.
This one's just too banged up. I know we've been looking at the bounce back plays, but like this is just a massive fucking downtrend. This is the worst stock ever. Look at this thing. Oh my God.
It like killed me to say it. I'm like, this thing is dead. Like, move on. That's forget hilarious. About it. Like, it's you don't want to catch these things. Like, they're just garbage. Next is DAL through 25.
Delta. Oh my God.
Same thing. Dead.
Well, I mean, we did see like the massive bounce back in something like Boeing, where members were making like 80% to long side. So I mean, you know, people are going to gravitate towards those trades once again because they worked in that Boeing. But unless we hear of like a massive bailout or something about these airlines, like more than that's already happening, I'm just avoiding them at all costs. Buffett. So everyone's like, oh, Buffett's probably buying these airlines. Buffett sold out of Delta at like between 30 and like 25. Like he doesn't know what's going on with the airlines. No one fucking knows what's going to come of this type thing.
Yeah. And that's the one sector that we've even almost forgotten about. That just from a broad sector standpoint, like sectors that tend to go bankrupt the most tend to be, airlines, biotech companies that their drugs fail. But we've forgotten about the fact that airlines are very, cost intensive, places. And when things get bad, they get banged up the worst. Where it's, I picked up a little UAL a while ago, and now I'm like, I'm not adding back to this thing. It's just like you said, it's easier just to find like other stuff than battle it out with the worst sector.
Well, that was funny because remember I asked you Friday. I was like, bro, do I just fucking buy oil and just forget about it? And you're like, even for you, like I'm not gonna recommend this. And bam, look what happens. The worst fucking day in oil history. So good looks, friends. I appreciate that.
Yeah, I've learned definitely to trim my advice. I'm like, let's just you pick whatever you want, but let's I'm trying to keep it very broad. Like just pick a sector, don't pick a name.
So you want to hear a funny airlines joke?
Let's hear it.
How do you become a millionaire in the airline industry?
Oh, everyone knows that. You start
with a billionaire. All right, next one.
Yeah. Okay, so going back to David. Last one is this KOD through 54. Biotech.
Nice. What the fuck is this name? What's the volume like? And so this one's teetering on those levels. 300, 500. Decent. Through what? 55?
54.
Oh, through 54. Yeah. 54 is definitely the level. It closed right around that level, so it's tricky. Definitely one you want to watch. I don't mind this one at all. I like this. I like these biotechs that are all crazy, just like this Alec and this. The Alec was the other one we bought today. But yeah, this one looks okay through 54. It's just tricky because you got to kind of give it to this 49 area for now. Let's see how it develops.
Yeah. All right. Next, we got Andy. He has a question for you, Shake. He says, "Are you planning to still trade opening range breakouts during earnings season, given what's been going on in the economy?"
Yes. I'm not going to change my thought process too much, but I'm definitely going to have my foot off the gas for day one earnings moves. I'm not, the economy is not feasting right now. It's no surprises. Everyone's going to have the same guidance, the same, they're going to lower their guidance for next quarter I'm not salivating to buy anything because I know they're going to be saying that. So I probably do take my foot off the gas of day one earnings buys, but I'll still buy earnings bases like the same.
Okay. Next, we got Tyler Kenny. He's looking at this VCYT, another biotech name, nice. Through 24 and 25. Yeah,
it kind of came off highs a little bit, showing it makes it very clear that 25 is a level, but I like this one. I like this. Yeah, this is a yes from me. I mean, it's very wide right now, 22 to 25. Wouldn't want to give it those $3, but through that 25 area, it definitely looks good.
And then next is this WK.
Yep. Oh shit! Wow. This company has some like amazing fundamentals. This will be a little bounce back play. I'm not terribly mad at this one. In a trending environment, we would never even look at this chart. But the best trades that have been working have been the bounce back trades. So how can I be mad at this one through 34.5, 34.25? Really tight setup. you just got to understand that there's a lot of resistance overhead.
Okay. Next, we got Wolver. Looking at this DT through
Diamond
27,
strikes, huh?
27 half.
Shouts to Carly B. Can we give a quick shout out to Carly B?
Yeah, of course.
He got in this mRNA, this Myrna, for being a coronavirus stock at, what was it, 20? Something
Think
like
so. He's up 300%, so he's got to be in.
So he's got to be in
Yeah,
like
from-
12,
from
13, 14,
20.
15. But he called it, this is an absolute man's trade. He bought this one really low, and even when it was a hot stock, he just had his position, he had his game plan, and he rode it all the way out. And then today he started taking profit, 300%. Just an absolute beast of a trade. What were we looking at? Oh, and we're looking at Dynatrice. This is like his stock, so that's what reminded me of it.
Going back to
this,
MR.
This is fucking Wave Runners?
Hold on, just going back to the mRNA real quick.
Oh, yeah.
There was a guy who DM'd us because they saw Carl's shout out of him make 300%, and the guy sends me a screenshot. He bought it at 30, chickened out, as what he said, and sold it at 31. And he's like, "Should I buy it back today at 55?" And I'm like, "Oh my god, you are an idiot!" Like,
You should. Yes,
no.
you should, friend.
Yeah. But again, back to DT.
All right, DT is a software company, by the way. What was that fucking Wave Runner company? All right, whatever it was. He's looking at this one through what, 28?
Yeah, 27, 28.
Yeah, I mean, the only reason this whole W pattern it's got going on right now doesn't look like a great entry, but if you factor in that it was these IPO highs, it's a very important resistance area for the stock, then it makes a lot more sense. Buying the highs of this W pattern isn't great. I mean, the buy is when it makes that second bottom, but if this can go a little bit more sideways and then through that 27.50, 28 level, that doesn't look too bad to me.
Nice. All right, next we got Tom Van Meter, his favorite name, AGN, through 190.
I don't like this because of the grind up. It's just been sitting up here 1, 2, 3, 4 days. This is like the textbook definition of your Mickey Mouse flag. I hate it because it's just done this slowly. It's like so D-Dog, unless you swung this, it's pretty similar with the action with the grind up. It really never gave us a chance because we didn't buy into the base against support. We were looking for that breakout buy. So that's kind of what this chart looks like to me, where it's like trying to get involved now is tough. I don't really like that.
Even that D-Dog, just that like 42 is similar to like Wolvert's DT through 28. Like it looks solid, but it came so far so quick that, flushed up to 42 and came right back. A little bit of,
Yeah, I agree.
Both.
D-Dog.
And then his next question, this is, again, more of like an opinion. He asked, why is AMD doing well and Micron, MU, not doing so hot?
This is a sector question about chip makers. What is, because AMD's in what the fuck are they in?
They're both semis.
No, I know they're semis. I was looking this up the other day because I was wondering as well. AMD is are they the ones doing AI? I forget what they're doing. They're doing something that's giving them a huge competitive advantage. I don't really know off the top of my head. But MU is a short. AVGO is a short. All right. AMD not a short. AVGO short. MU
right.
short.
And then
where are we going from here?
next we got Nicholas. Look at this CRM. 165.
I told him yes in the chat. I had a trade going on. Now that I look at it, it looks like it's gone straight up into this 165 from this 130. So no, I don't like this. I think you gotta wait for this to consolidate.
Yeah, it's like I agree. It's like the 165 is such a clear level of resistance, but just like you said, it's you didn't want to buy 150, you didn't want to buy 120, you went at 130, 140. Now you want to buy 165. It's like.
Yeah, this was one of the harder newsletters to do this week because everything's so extended. It's really, really tough to put on new risk and trades that have, like, if they haven't made a move in this 30% run, do I really want it, long? Yeah. So. And then
and then the ones that have made the run, it's like, if you're not in,
right,
you can't.
Like, like, what am I, an asshole? Like, so it gets tricky up here.
Yeah, definitely.
Where we at?
Next one is this SWI. Through 17.
This is a tricky name. We've been in this one a few different times. I had it this day in January, February. We bought that 1915, 1920 area. So nice. was holding on, broke the new highs, and then just gave it all back the next day. It was a fucking disaster. This is just this is what you would call Mickey Mouse flag again to me, where it's like, it's only been up here 5, 6, 7, 8 days, not a real level. I get it, this like support-ish area, but I don't really see it here. Maybe it goes sideways another week, and my opinion changes.
Yeah, and even this, it's again in less than a month, it's up 40%. So this almost seems like one where it's like you just wait for 19. Like even if it takes 6 months or however long and it gets back to 19, and that's like the real spot, it's almost easier than trying to like randomly get in here when you're risking 5, 6, 7, 8% day one when it's not even that great of a setup. Mm-hmm. Next we got Bobby Moore. And he goes, what do you need to see in charts or the economy to be back in full risk on mode?
We just made a 30% move off lows. I hate questions like this, yo. I don't fucking know. I mean, everything's price action based for me. Everything's price action based. I'm not. And what's funny is that I wasn't ready for this up move, but I actually had a decent call. I'm not like patting myself at all in the back because I didn't do as well as I should have in the up move, and other people did. But Adam Chatty pointed out on this first down move, when we just began bouncing back, and we got that first economic number. I forget what it was. And I was like, the first economic number that's a disaster, and then we rise on, like that should be the bottom. And then he hit me like, yo, like this is that. This is like what you were saying. I was like, but we just like hit those lows. Like I was looking for more damage to be done. I started overthinking it a bit, and that was it, where it was like we got that bad news, and then the market took it as a good thing because maybe stimulus will come next. Who cares about all that other shit? The market took it as a good thing, and then that's what triggered this 30% run. So I'm not too focused on economic numbers, all that stuff. I'm focused on if a number comes and then the reaction to it. That's what I look for most importantly. I don't try to be the biggest brainiac in the room or anything like that. I look at reactions to events, and that's really all I can answer to that question.
Okay, and I could add like a little blurb on it where when it comes to like full risk on, if you're talking about being 100% invested versus having to be 100% in cash. Most people tend to don't be that heavy on the foot where it's either you're fully in the market or fully out. You can be half in, half out. And what we try to do or try to teach our members is to have, the names that you like, you get into those names, and we focus on rebalancing where you got 10 names and your top 2 are your best winners. Like for Carl today was at mRNA, he's up 300%. He's looking to take some profits, take some money off the table in that big winner, and then one that's maybe not doing so hot, he can put some of that money back to work, or one that's setting up. So he's he's not constantly every minute moving money around, but in that broader picture, when you pick out those names that you like, and you have those winners on your hand, you get in the habit of taking some profit and then putting them back to work in plays that are setting back up again. And that's kind of even for me, I know when I'm like 100% invested, I feel like we're just near the top because I feel like I should never be 100% invested.
That's usually a cue to trim some.
Yeah.
No, not even seriously. It's like a theoretical cue where you're like, all right, now I'm risk on fully at the top. All right, now I got to be a little more defensive.
Yeah.
Because no one's going 100% risk on at the bottom, unless you're the fucking greatest trader in the history of mankind.
Yeah. But yeah, so that's hopefully, Bobby. Hopefully that helped. And if there's something in Shake's answer or mine that we can dig further into it, just let us know.
It's tricky for me because I don't look at my cash levels like, oh, I'm 20% cash. Oh, I like the market now. I'm 40%. Like I'll see someone on a 5-minute flag and I'll go from 0 to fucking fully invested in fucking 5 minutes and then be out of that position 20 minutes later. Like, so it's tricky to answer those questions for me.
Yeah. Again, there's a couple of those questions in there where they're, I don't say cringeworthy, but it's just hard for us to answer.
It's more of a theoretical question than anything, and it's like they want the magic ball. What does the government have to say for a bottom to be in stocks? And they want me to give that answer. I don't have that answer. I'm sorry. I wish I did. I'd be so rich if I did.
And even like what we're seeing now is, and it's everything with the market. It's always like looking backwards. Where now it's so obvious about that news.
Yeah.
And then in 3 months from now, this oil news will be so obvious, and in 6 months, all this Corona stuff will be so obvious. It's always obvious way after the fact.
Right.
That you'll never have the opportunity and knowing what's going to happen after the fact. It's like you have to just make do with what you have in that given day. And that's the hard part for most traders is that you usually don't have the answer at that time. And that's when you have to make the hard decisions. Okay, so we knock that one out. Let's jump back into to Gollum. He's looking at this work through 30.
I like this work. Yeah. A bunch of guys are already in it. A bunch of guys did really well with their entries. I'm not sure when they bought it, but it seemed like a lot of people were in it already coming through today. But I mean, just inverse head and shoulders here. Really momentum-y name. Momentum-y? High beta name. So if we can get through this area. And what's the short float here? I bet it's got a nice little... Minus 52%. Okay, cool. They don't give it to us. All right. Well, I don't know. But yeah, through that area, it definitely looks good.
Yeah. So even for David Taylor, if you're still watching this and you're looking at that EB, again, these are both recent IPOs. Your EB is almost, again, this work hasn't got as beat up as that EB did, but EB would be like the equivalent of work like at 16 right now. But this name reversed and headed higher. EB hasn't shown that yet. So instead of trying to catch that like 16 equivalent in this work, it's easier just to find the name that's already seen that the baddest behind it and it's working its way higher and finding those buys. Like, and some of the guys most likely bought up through 26, and now we can look to buy through 30. But it's easier to let it find its bottom and work its way up than trying to catch that bottom and think that you're going to ride it back up to highs. So hopefully David catches this part. Next, we got Gollum. Another name is this KNSL through 115, 116. It's an insurance company.
Yeah, a little thin, under that 200K threshold that I like to see. I may have waited on that notion. They got earnings coming up April 30th, but this is a nice little flag. Stocks responded well. I hate the thinness, and I've never really traded the name or know anything about it. It's an insurance company. You tell me, so I'm not keen on a super massive breakout for an insurance company.
And then last for Gollum, he's looking at this Lake through 18.
Lake. They make hazmat suits. Yeah. Honestly, I think you look to buy it through 17 against the support area. But I think this one looks good. This is a really nice flag. Kind of like consolidation, kind of wedging. But I think in this area, it's holding up really well. I think it breaks higher from here. You get a little stock down here, maybe add through the 18. I like that one. I'll add that to my list. I'm writing it down.
The only thing that's,
They make hazmat suits. Lake.
Yeah.
We used to trade the shit out of this in, I don't know, 2015 or whatever it was. Doesn't
I
matter.
know, was it that through, I think it was like through like 10.
Yeah.
I think we traded it. Yeah. The only thing is, like, if everyone's buying those suits right now, like, this thing should be going.
Who gives a fuck about what the price action's good? You can't say it,
And then next, we got J Fox. Look at this Google. GOOGL through 1285.
Yeah. I mean, you just heard me. I'm getting a little, I don't want to say bearish, but bearish would be the word. I don't want to buy these things after the run. I'm getting cautious up here. If I'm wrong and this goes sideways a little bit and the run wants to continue, then maybe. It's got to prove me wrong first, though.
Yeah. I mean, and again, I know Fox, I'm going to just jump in a little more. You got to think about a month ago, this thing was at 1,000. It's now almost at 1,300, so it's up 30% in a month. And again, I didn't mention this part, Jake, but his target was 1313. 1313 is really made up on this chart. Really, any of these really big leaders that aren't back to highs, that really should be in the back of your mindset. Like, if I'm trying to buy this leader in its space, my mindset should be I should be holding for that retest of like 1520. And again, this is probably just a short-term trade, but that's kind of the mindset you want to have in the back end, where there's nothing really stopping Google from getting back to highs. Everyone still uses Google, But that being said, I think we both kind of covered that.
Google makes a ton of money on ad revenue, and what businesses are really spending money on advertisements right now if they're shut down.
Yeah. Next up, we got Tommy Bridwell. This is going to be a funny one, Jake. More for me, not for you. He goes, "What are yours and Shake's computer setups like?" So I'll let you start with yours.
What does he mean? What are my computer setup? I have 6 screens. I like to keep the main name I'm typed up on the bottom screen where it has intraday, daily, and weekly chart, and then I have 15-minute charts all over I have 4, 8, 12, 16, 20, 22 other charts where I just keep 15 minutes of things I'm just like keeping tabs on, and I'll usually keep One of those charts, the SPY, one in the Qs, NASDAQ, and then just whatever names I'm kind of following.
Mhm.
That's it. I just stare at these motherfuckers all day. That's all I do.
Yeah. So Tommy, I'm using Shake's one of his computers because
Oh, yeah.
my computer was so old and Shake was just fed up with my slow computer that he actually gave me one of his. So I'm actually using one of Shake's computers. I use one screen.
That
I don't know how
browser
wide.
history.
Yeah. I just have one screen. I use TradingView. I only look at daily charts. So again, I'm more big on. I have the watch list. I have this, sector rotation, the Dow 30, the S&P, Nasdaq, and I'll just scan through all those. I only look at daily charts, no indicators. So I'm very simple. Shake is much more like strategic when it comes to computers. Shake, for someone who's new,
Yes.
do you think the computer is going to matter?
No, not at all. And the first thing people want to do, the most common question I get is, what charting platform do you use? That's it, because it looks so pretty. Like that's the new guys are so much more concerned with the look, and and that's just human nature. When I was first started snowboarding, I was so obsessed with the outfit I got. Now I go out there 100 times a year in the same bullshit and don't care. It's
Yeah.
just kind of just human nature. I want to look cool doing this.
Oh, 100%. And it's funny because one of the later questions was, what software to use, but we'll skip that one. Um, all right, so next we got Blake. He's looking at ABC
Yeah.
through its 90.
Hell yeah, I love this ABC. Just love it. I love that. It technically triggered a little bit today, but it just came a long way. $3 off lows. This isn't a very, very fast mover. And, you're going to tell him that this is your fucking buddy, this ABC?
My buddy?
Yeah, remember the prop days?
No, mine was Anheuser-Busch. Was Bud. Bud was the one I traded every day.
All right. In the big room, it was ABC, but whatever.
Was it?
Yeah, it was.
I don't remember.
Whatever. I love it through this 90 area. That's one of my favorites.
Maybe it was. It's a long time to forget.
It was.
I actually passed the old office yesterday. I was with Sparrow. We went to the Wall Street Bull.
Oh, yeah?
And we passed the
Nice.
office. We were the only people there.
Right. Place is on fire.
All right, next we got Sebastian. You're looking at this CMCSA through 38. It's the satellite TV company.
If it can bounce back through there, maybe. But it looks like it's failing this area. It had to bounce back, and now it's a Mickey Mouse flag. Looks like it's trying to head lower with today's price action. So this is an avoid for me personally.
All right. So we're out to the member ideas. We can jump into some of the social media questions if you are ready.
I'm ready.
All right.
I'm ready.
So first up, we got Cole R. And he asked, do you use buy stops or market buys when placing a trade?
I'm always going to tell a new guy to just use buy stops, sell stops. Just have a game plan ready. Buy 38.25 with a sell stop below 37, whatever the trade is, and just kind of have it game planned out. For me personally, I will kind of work into a position. I'll watch a chart. I'll limit buy-in and stuff like that on the bid. But for new guys, definitely just keep it very simple. Buy stops, sell stops, game plans, very simple stuff.
Yeah. And going off that, the reason why we use a buy stop over, say, the average new guy who tends to use a market order is a market order, you're more than likely going to have that FOMO or that I'm chasing into this name. Where we're using a buy stop, you more than likely formulate, okay, I want to buy this stock through the break of 25. Whenever that break happens, I'm going to get in. Versus it's at 24.90, let me mark it in because it's going to go at 25, and then it doesn't. So that's why we try to focus more on the buy stop, because it does help remove some of that FOMO aspect, especially when it comes to new traders. The next question that Cole had, he said that now that a lot of the leading names like Amazon have already broken out, are there other names you're looking at to set up, or are you still keeping an eye on some of those leaders?
I mean, I'm always keeping eyes on the leaders, mostly because it gives so many cues to market direction. If you just look at Shopify, Amazon, and Netflix, and they continue to rage higher, it's going to be hard for the market to sell off. But if they're beginning to have that pull-in, for example, that could be the kind of catalyst for the market to pull in. And the reason for that is that they have such a large weighting in the indices. The rest of the market isn't raging with these names. It's the market's really a select few names raging right now. So I've been kind of cautious in this whole area. But, I'm always looking at the leaders. It's just a great cue of market direction, and I'm always looking at new setups. So I'm always looking.
And even going off of that, I think this is a very relevant scenario. with new guys tending to find the cheaper names. Where if we just talk about these leaders are all at basic, you talk about Amazon new all-time highs, Shopify new all-time highs, DXAM new all-time highs. So these leaders are at new all-time highs when the market broadly is more than halfway back to highs, but then the new guy still wants to find the biggest piece of crap stock, and then that stock hasn't moved at all. So this is like a big reason of why no matter what the market's doing, we're always focusing on the leaders, because even when the market gets smoked, these names are the first ones to turn around and hit new highs when to the airlines or the cruise lines or the energy stocks, they're nowhere to be found in this bounce. That's why we focus on these names.
Shopify is fucking insane right now. Insane. And that's what leaders do when the market turns. It didn't get beat up too badly. It got hit up. Definitely got hit up. And then just rips back higher once the market catches any sort of bid. And that's not something rare. That's every time the market sells off, there's going to have the leaders that don't get too banged up, and then they fucking turn up and rage when the market stabilizes. Sometimes it's that simple.
Yeah, and even for the shop, it's up literally one. So if you bought the all-time high of shop before this market correction or crash or whatever you want to call it, you're profitable now. If you were an absolute beast and bought near the low, it's up almost 100%. So it's like you could be the worst trade in the world, and when you buy the leaders, you tend to get bailed out at a certain point. When you try to bargain shop for the things at all-time lows, very rarely do you get that opportunity if you do make a mistake. And when it comes to trading, we all do make mistakes.
Yeah, the TE difference. How long has Casey been with us? I got an arrow pointed at the doji where she bought.
I want to say less than a year.
It's less than a year. She's buying 350 shops, selling 630, whatever.
Yeah. All right. So let's get to the next question because some of these are pretty good. And by good, I mean they're horrible.
Get out of here.
Okay. So Vishal asked, if a trade triggers, this is verbatim, if a trade triggers quicker than you expected and you don't want to give it that much room to the low of the day, do you buy less than planned because of FOMO or do you skip it?
Generally, I'll skip it, but it depends on the name. I mean, that's a very circumstantial type question. But everything. I'm always quantifying my risk based on where I have to put my stop. So if I have to give something $2 and I want to risk $1,000, I'm going to buy 500 shares. So it's always my sizing is always based upon my risk. It's not like I'm buying 1,000 shares through this level no matter what. Oh shit, where do I got to give it? It's the opposite. It's I have to give it here. I want to risk this much. All right, then how many shares do I buy? So I think that's just kind of the mistake he's making with that thought process.
And then again, especially with new trades, it's like they want to make the five. Like, how can I turn 1,000 into 1,200? And it's like, well, you got to reverse it and say, okay, I have 1,000. I'm willing to risk 100, and then that's when you determine, how much you can buy. But again, that's for most new guys, it's a little bit backwards, and they don't want to do it that way. And it's unfortunate why they don't make as much as they should. Let's see the next question. He goes, when is it okay to enter a trade without optimal volume? Or to frame it differently, in what types of trade setups is volume non-negotiable?
What does he mean non-negotiable? Oh, like I have to see the volume?
Like it has to have huge volume.
Generally breakout setups. I mean, like just things breaking out of resistance. I want to see that volume. And then if you're buying into a base kind of thing, it doesn't matter as much. Where it's like, if I'm buying a breakout, I need to see that thing break out right now. So I need that volume confirmation that buyers have the same idea I do. That way bigger buyers than myself that are going to continue buying the stock. And that's why volume is important, because we want to be on the same side as the big buyers, as the whales out there. We're just little minnows out here. So, for the most part, you always want to see it on the far side of resistance. That's it.
All right. And then lastly for Vishal, is this DUK through 92?
Nice. All right, this is failing, so it looks like it's gonna break lower. I was talking about this with him over the weekend. He was looking at this DUK and also this D energy names, and it was like if we go higher, it probably goes higher. And I'm not very, super psyched to trade this energy name, but it looked like it could have gone higher before the open today. But I mean, it failing today, and then the move of oil, this probably goes lower to me.
Next, we got this from Jack Goss. He's looking at this DEAC through 18.
Diamond Eagle Acquisition Corp. I have no idea what this company is.
Never heard of it.
I love IPOs through their recent highs. So on that notion, it's decent. But this has to be related to Diamond Energy. Just by the volume, it does 3 million a day. But this one, it just it ripped from 12 to 18. That's a 50% move very quickly. So I need to see a massive daily flag here. That's it before I get involved.
Jack, you're probably buying the high if you buy it right now. Nathan Jennings, he's an old TE member. Looking at this Uber through 29.
I like the Uber flag.
26.
Yeah, I think Higgins and a few other people might still be in this. I'm not sure. Higgins both self support right here this day. Yeah, I mean, if it breaks this flag, looks like it goes higher from here.
Yeah. So even for the guys, if they're watching this and you're not a member, the guy prior, Jack Goss, looking at this DEAC, looking to buy 18, retesting all-time highs, super extended, no setup. Nathan Jennings was a member, no longer one. Looking at Uber, clear flag, consolidating, concise entry, concise stop. You can tell the difference versus someone who is new versus someone who's had some experience and has learned and had spot chart patterns. And these two kind of go right back, back to back, the difference between the two. So hopefully you can see the difference of why we want people to learn first. Next, we got this HOR_Hey, looking at this BYD through 16/18. It's a casino and gaming company.
Oh, God. No, I don't like this one. Just too beat up. Doesn't look like it's got that. I don't know. Can I say it just doesn't have the look? Is that? I'm avoiding any gambling companies, any casino companies. They're dead right now. Holy shit.
Yeah. 36-30. 36-6 in a month.
Crazy.
Same thing.
Crazy.
That's all you. Hey, we'll trade other stuff.
84%.
Yeah. Okay. So we got next guy is Fabadid app, and he's asking about Tiffany, which is a buyout.
Oh yeah, it's a buyout. All right, next.
Yeah. So his question was, he goes, "What is the correct behavior in the presence of a buyout?"
Sell it.
Yeah.
If you're lucky enough to get a stock that gets bought out, sell it on day one, because if the deal doesn't go through and they gap down, you will fucking hate yourself. So sell it day one, take the gift, take the winner, and that's it. Yeah,
and if you have the Tiffany chart up, that was October 25th. So the deal got announced, the thing gapped up to basically 129. If you sold it that day, it was a home run. If you sat with it, okay, it bounced up another couple dollars, and you still sat with it for the whole year, and then it got smacked, came right back. That's basically the ceiling of the stock when it gets bought out.
Right.
When it gets announced, just take the win and move on.
Right, you make 25%, now you're going to start nickel and diming it, like, I need to make this extra 50 cents here.
But the crazy thing is, and I've had a lot of discussion with new guys, is like when stocks do get bought out, like when this Tiffany deal is done, they'll never see they'll never see this chart because it just gets thrown in the trash. It's just gone. So when you don't experience a buyer or haven't seen one, you don't really know what happened. They think that it's just going to keep going higher because it's consolidating so tightly, but it's just because everyone knows what's happening right now. So that's why it doesn't move. So typically when you hear of a buyout, thing gaps up, you just take the gain. That's it. Don't sit with it. You'll sit with this guy. If you sit with it for this whole time, it hasn't done nothing, Next, Justin Garcia. He says he's brand new. Any suggestions on how to educate myself on trading?
Perfect, Bennett, you got it.
Yeah, Justin, fire yourself because if you don't know anything, you aren't going to teach yourself anything, and then find someone who knows what they're talking about. Next up, we got Komensky Ross, E-Rich's little brother, looking at this DLTR through 81.
Daltry, I like this little bottom setup. Yeah, it's got to beat this 82 area, 82.50. I have this one on my watch list too. Watching it, not super excited about it, but just keeping my eye on it. And we'll see through that 82, 83 area. It could be something.
Okay. Next, we got Luca_brand. He's looking to buy Google after earnings, and specifically buy at 12.74 after earnings.
Oh, okay. Well, he's got to figure it out.
Yeah.
Should I buy? Mr. Man? All right, come on, next. Fuck this. Let's
go. Let's see. Okay, here's a good one. Jordan Renner. So he bought GSK through 38 with us. I guess he read one of the shakedown or the big pictures a few weeks ago. So he bought 38.
Glaxo, this was you. This wasn't me.
Yeah. So he bought GSK. You read the big picture for free. So congrats taking the trade. He bought 38, stopped 37. His target was 44. The stock's at 42. And now he's asking, do I sell it or do I wait for 44?
No, I mean, well, you got it?
No, you can take it. It's fine.
It doesn't matter. Just trailing stop. Have a trailing stop. Right now, it looks like it ran right into this previous resistance area, and it's losing steam after it went straight up. Honestly, I would probably, if I were him, get stopped out below Friday's low, 41.69. But his trade. It looks like it filled the gap, made the run to resistance, and now it has to pull back and consolidate before it does whatever it wants to do next. And with earnings coming up, I would take the win.
Yeah. And just for this name, this was a name where they had like an FDA ruling in Europe where they had like a patent on one of the, vaccines for the coronavirus. So that was like one of the reasons why I was looking at it through 38, was just because, I didn't really fact check that, but I looked at the patents and all the info came up. So I was the little bit backstory behind that setup. Next, we got at J Lampert. He asked, could you guys put out a list of books you guys recommend? If you haven't watched any of these videos, we talk about 2 books in every single one. There's over 40 of these videos, so that's 80 books. Just got to watch these, skip to the end. You'll have 80 books to read, and you'll keep busy for months on end. Just trying to speed through these. Next, we got Tam_RZ looking at the airlines, DAL, AAL, and UAL.
I just think it's too early. Avoid for me. If Warren Buffett's not telling you he's selling out of them, if they're being in there for years, take that as all the information you need.
Could not agree more. Next, Johnny_Fulton looking to buy GOLD.
Gold?
Yep, through 25. Talking about
GLD?
buying all time high. Or
What,
GOLD, Barrick Gold.
Oh my God. No, just no.
Yeah. Super late.
Here was the buy. Here was the buy where it begins to extend. It could go higher, but I would be very surprised to see it go higher immediately. It's got to consolidate. Look at the move it just made. Now stocks they break out of consolidations. They have a breakout move, then they consolidate, then they have a breakout move. So this had the breakout move. You missed it. I'm sorry.
Yeah, I missed it like 4 or 5 times. You want to buy 25 versus 23 with a target of 30, and it was you buy 25, you're at 23 in 3 days. So it's just lowest waiting to happen. So we wrapped up all the social media questions.
All right.
Whew, that was a lot. That was a lot of questions.
Yeah, you got popular real quick, huh? It's 4 questions last week.
Let's start trimming these out. Okay, so if you want, Jake, we can jump into good trade, bad trade.
Yeah. You want to start? I could probably take some time.
I got just like I got 3 quick ones. Good trade would be this IBB. One of the sectors that we talk about buying every week. This was one that I bought. Other than buying it every week, I bought a little bit more than usual, up through 100. Now it's at new recent highs. The next high is the all-time high of 133. Really past that, there's no reason why we won't see this in like a year up in the 160s or higher. So that was like one of my really good buys from a sector standpoint. Bad trades, 2 of them. One being Amazon. Again, I was talking about this name beginning of the year, rode it all the way up to 2020, got stopped out in this market crash, and did not get back involved. So I missed out on exactly what I was looking for, and that was just my own mistake. And then same with this PG. This was like a longer term hold that I actually had a name that I held for more than a year. Bought it at 100 more than a year ago. I got stopped out again during this market crash, and I got basically stopped out a day or 2 before the turn, and it's right back to highs. And this is what we talk about when people have to chase names. In both these examples, I got stopped out basically for breaking even. In both of them, I didn't lose any money, but that forced me, if I wanted to get back in, I would have had to chase higher. And that's what the market needs. When charts get broken, people get shaken out, they have to chase to get back in. And that's what we've seen in a ton of names recently. Basically every name that's gotten broken out, beaten up. And it's no surprise that a lot of these leaders, they get pushed to new highs because it's everyone who got pushed out or shaken out of the name, they're chasing and climbing to get back in, and they don't care about what price. Just like the guy on Instagram today who wanted to buy, mRNA 100% higher when he sold it, at $30. So those are, some good and bad trades that I'm, learning from this week.
Okay.
What about you, Shake?
So I had a good trade in this Piton last week. I'm still holding like a tiny feeler. We might have talked about this last week. 29. I took off a ton into this 37, not the 38. But looks good. It got downgraded, so it's falling off. I have like very, very, very small position. I booked almost everything. So I'm waiting to see if it wants to come retest my price, potentially re-enter that one. What the fuck else did I do? GH was the massive winner. big time shout out to Heaven. I have some good lessons here. Let's see. Hold on a sec. All right, so a lot of people are asking me how I built into my position. All right, so let's get this. So here's the GH. I got a little. I sold more than I first intended to today. I'm just getting a little spooked by this market. But so here was the entry, and this is what people were asking me how I built into position, because I was like, oh, I got 300K of this GH. 300K GH is like fucking 10 million Apple is what I said, because it's such a volatile name. So this name, it's been kind of sleeping. We've been watching it in this big macro base, and then this big buyer came in, and Heaven called out this buyer, and I thanked Heaven 500 times for calling out this buyer, because it made me a shitload of money. So once this buyer came in, that told me that the stock wants to go higher. So I began buying it against this 67 area, and I would let it come flash down, and then I'll wait for the buyer to come back, and then I would add some more, and I would let it flash down, and then once I saw buyers come back, buy some more, and then when it gets that official trigger, that's when I add heavy and it comes back. Ooh, that's a nice little pullback buy. But where the fuck? So then I've been taking off into strength. I think it could go higher. I definitely took off more than I intended to. But what I really wanted to show was how I worked into that position. So that was good. What else we got? It's Apple. I'm fucking gonna murder this Apple short. All right. So this Apple. I mean, they got downgraded. I hit some. I was working into position Friday. Hit some 184 initially. Kind of working into position. Cover some into the weakness. Cover some on a 5-minute trail. Cover some more on a 15-minute trail. Pretty much covered my position over the weekend. And then I got re-short into the close today. Like I added heavy just against this 282 area. And I think this is going to be the tell. If this wants to hold up and it wants to tell me I'm wrong, then I think the market goes higher. But if I'm right here, I think we're going to get a pullback in the market. I think Apple is one of the keys that I'm looking at. What else? Oh, this SDGR was massive today. This was so. Shouts out to Don Diego, Moody Mo. We bought this thing today, and you can see I'm on a 5-minute chart. We bought it, and then 15 minutes later, I was buying against this 40. We almost got stopped out. It was almost like a 15-minute loser. Just like I was like, oh, this fucking SDGR like sucks. Like whatever, and Mo comes in, starts laughing at us, like, oh, I took a loss last week. As he said that, the bottom was in, and it fucking just raged the entire day, up like 15% on the day.
Yeah, up 20.
Still hold up 20, whatever, up 20%. I thought I was taking a loss in 15 minutes. Ends up being a 10-grand winner. Yeah. So that was sick. What else is going on? Let me see. GH, Apple, Piton. We hopped into this Alec today. I got out of most towards the end of the day. I didn't like the price action, but I'm still in it a little bit. I've been messing around with this Go. I got out a lot today. Just think it needs to pull back a little bit more. And I got a lot of GH still, so I'm kind of focusing on this. That's really it. I think I covered everything there. Where from here?
All right, so next we got top idea of the week.
Okay, what do you got?
I got this ESPR, biotech,
Nice.
up through 40.
Yeah, it kind of closed right at that level. Looks like it wants to fill the gap here. That reminds me of this ALLK I put on the shakedown. I like this one through 65. I just had too much risk on. So, I mean, this one's still in, like, kind of the area. And then you can see this massive, like, previous support level. And then if we get back on top of that. So that's very similar premise to the ESPR. Anything else?
That's all I got.
So I like that work was mentioned. I put that lake on my list. What I like to long side work. And then ABC. So everything I like to long side mention. I really like this Apple short, as I said. I think it comes down and fills this gap. And then the other short I really like is I took a loss in this last week, AVGO. Just kind of getting chopped around. If it breaks this to the downside, it just looks like it's rolling over. Like this is one massive H pattern. So that's really it out of me.
All right, let's jump into the book of the week.
All right, time to jump in.
All right, let's do it. All right, Chick. So what are you reading this week?
All right, book of the week. I got Where Are the Customers' Yachts? This is one of the Warren Buffett's favorite books. It's just this guy. It's by Fred Schwed. It was written in 1927, 1928, and it's all about like the fallacies of the different industries within finance and stuff like that. So it's a very interesting book, and he's very like cheeky, very sarcastic. It's actually a really good and really quick read. Very enjoyable if you know that he's like being sarcastic when he is. So I completely got this just by Warren Buffett saying this is one of his favorites. Where are the customers' yachts?
I'm literally ordering it as we speak. So I got Shoe Dog. I think this is a book. I think you read this one.
I definitely did. This is a classic.
I wasn't the biggest fan of it. There was one part that like his main like philosophy is don't tell people how to do things, tell them what to do and let them surprise you. That was one of his like big takeaways.
Uh-huh.
And that's something that we've tried to emulate more recently with letting some of the guys help us with the videos and helping us with YouTube and some other things where it's like just go do it and
Right.
like kind of micromanage. But an interesting book. Like he runs into Bill Gates and Warren Buffett.
I didn't. Okay, you go on. Tell your story.
And then he just like this is like after Nike's public, like he's already a billionaire. I think at this is the end of the book. He's like worth $10 billion, and he bumps into them and he's like, they're worth 5 times what I'm worth, but I'm like wondering what's on their bucket list, like what they want to do, like because they've already checked off the money box.
Yeah.
What were you gonna say?
I didn't love him at the end of that book. I think everyone else read that book and they were in love with Phil Knight, the creator of Nike. I wasn't personally in love with him. I didn't love how he managed the business. I didn't love how he made himself out to be this guy who was like holier than thou, and then it comes out he's like he was giving up. I'd rather own a tiny piece of something massive than a massive piece of something little. But he had like when they went public, he had like 86% of shares, and everyone else had like really tiny amounts. But he played off to be this like amazing guy and all that. He's a visionary. I wear fucking Nikes every day, so I can't really hate that much. But I wasn't as impressed with him as it seemed everyone else was at the end of that book.
Yeah, I noticed that too. Like in like how he like his like first employee, like he never answers the guy. The guy like talks to him every day, and he's like never responds.
Shit like that made me so mad. Yeah.
But then he tries to play this like coy, like nice guy. But for me, I feel like they should have sped up the story a little bit. Like it was just such a drag of like the Tiger days and like before they were anything. And it's like, all right, we get it. Like you were a startup, but like let's get to some of the cool stuff when you did sign Jordan. Like those parts that unfortunately are kind of left out. It was like the last page. He like crams in the last 30 years where he talks about.
I couldn't stand that. Oh my god,
that's
so funny. It's so funny because I was that's one of those books everyone always brings up is these great entrepreneurial books and stuff like that, and it is because what he did. We went over to Japan and got the shoes and whatever, but like everyone says it's this great book, and I just was not impressed at all at the end of this book by this dude.
Yeah. This is the first book that I've not ripped one page out of. Every book.
No way.
Every other book that I've ever read, even books that I've hated, I've always had like a page, like something that I took from it. And this, I'm like, where was that one line in this book that I thought was like somewhat valid? But yeah, so we love Nike. Not fans
love
of this
Nike.
book.
Love the stock. Phil, me and Phil could have a conversation.
All right, man. I think we wrapped it up.
All right, 420. I'm getting the hell out of here. Go study some charts and nothing else.
All right, guys. We'll see you next week.
Peace.